Hey, Danny Radin here, and in today's video we are going to be breaking down one of the most powerful patterns in trading, and it's going to be something that is completely against the grain in what you probably think it is. A lot of people refer to doji candles and engulfing candles, and those are important candles, but I'm going to show you a pattern, or a candle pattern rather, that is far more effective to your trading. So let's jump into the charts now. So here we can see an example with Euro USD, and what most traders will initially look for is one, structure, and then two, they're going to break down different areas of support, resistance, and trend lines. So if I was going to start identifying this, the first thing I want to do is apply the herd mentality, how a lot of retail traders will approach this markup here. So what I'm going to do here is I'm going to grab this tool and I'm going to identify a major support and resistance level here. Now this is where a lot of traders will start looking for opportunity, and same thing for the bottom down here. We can see a touch of resistance here, a touch of resistance here, and then we can see a solid higher time frame break retest level. And this is how a lot of traders will look for opportunity. They'll find these areas, identify significant support and resistance, and then use them, one, for targets, and then two, for entries. And what you will find that more often than not, you will get run over using these areas. And what we want to do is be extremely patient and wait for this candle pattern. And this is manipulation. You'll hear this referred to as order blocks, manipulation candles, bankers candles, but whatever you want to call it, it's manipulation. So what we want to do, instead of doing something like this and use this area for resistance and sell off this area maybe down to this area here or the next major level down here, we want to wait for these levels to be completely disrespected. And what I mean by that is we want to see price push higher than these levels and then push down like this, right? So you can see price here went much higher than this resistance level, which if anybody was going to enter off of this level here, they're getting stopped out of their trades. And that's also going to induce buyers, because what buyers are going to then do is say, okay, this resistance level broke, I'm going to look to buy and then take it out to the next level. Same thing with the selling. If price were to do something like this, what a lot of traders will do initially will come back to this level and then look for something like this. Stop losses and targets always based on these major levels. So I'm going to show you this pattern and how we as smart money traders take advantage of these patterns. So I'm going to slide this out of here and I'm going to keep those levels there for reference, and I'm going to press play on this replay. I'm going to slow down the speed just a little bit here, and there we go. Let me speed it up. So there we can see price pushing up higher than this resistance level. And these levels are pretty significant. One, when I refer to the herd mentality and how we use them as smart money traders, is because they're building up clusters of stop losses. These are areas that are accumulating lots of liquidity in the market. And these markets are driven by banks, institutions, hedge funds, major players. And you have to be respectful of what they're doing. And then when we identify areas like this where we can anticipate manipulation, we can then wait for this pattern here, because this is just a huge cluster of money, a huge cluster of money, and another huge cluster of money, where the retail traders are going to be looking for opportunity, and they're coming into these areas because they're filling large volumes, large positions here, right? So there's a lot of volume coming into the market. So they're using these orders, these areas of stop losses, and coming in and taking you out, because there's always going to be a transaction there. So what we're going to do is we're going to let this play out, and we can see what took place here. So the move happened that retail traders would be looking for, right? They're looking for this level here and putting stop losses somewhere above this area. And that's why these concepts of support, resistance, trend lines, head and shoulders, wedge patterns, they're extremely subjective, because it's extremely hard to know where to put your stop loss, and it's extremely hard to know where to enter. It's very broad areas. And just for those same reasons, it's extremely difficult to know exactly where your targets are going to be as well, because these levels and these squiggles or lines that are typically drawn on these charts, they do not move price. You have to understand that liquidity is the driving force in the markets. So that's what we're really paying attention to. And this is the pattern here. So we can see this strong bullish candle followed by a very strong bearish engulfing candle, and then that leads to the big move to the downside, right? So anybody that was putting stop losses above this area, depending on how high they put it, most likely getting taken out. So the move is happening after these areas are being attacked. So once that happens, that is when we as smart money traders looking for this pattern, identifying manipulation, we can then come in and use this to get very precise entries. And then we can also get very precise targets as well. So there's no question about where we're entering, where we're putting stop losses, or where we're targeting, because we're targeting these levels that we're gonna anticipate manipulation. So I'm gonna move these levels out of here, just slightly out of the way. And I'm gonna change these to X's. And the reason why I do that is that lets me know, okay, this area has been manipulated. So I'm going to put an X here. I'm going to put an X down here. And we can see price is now on this support level. Whether that breaks that or not, we still have other major areas that we would be targeting. We're looking for major lows like this and major lows like this, right? We can see this big double bottom here. That's another retail pattern that signals reversals. So when we have this pattern, that is what we want to use for our entries. And we can get into the details in another video about how we can get even tighter entries, but we're just using this as an example here and not going to get too into the actual pattern itself. So I'm going to not even throw my fibs on here, and I'm just going to identify this candle here. I'm going to put a line here. We're using the open of this last up candle that led to this move here. And I'm going to put what we would use for our entry, stop loss on the top of that manipulation. And then we can put our target here below this support and resistance level and ultimately down to this low here. And I'm going to play this out now and we'll see how this plays out. So we can see price bouncing off that support. That probably brought retail traders in for buying. Their stop losses would go under here. We can see price pushing back up to that manipulation candle, and that's what we would anticipate to be respected. So I'm going to continue this, and we're going to see a strong reaction down from that manipulation candle. Let me speed it up. Ultimately cruising down, taking out this level here and this target, and then you can see we marked up a target at the bottom there, ultimately coming all the way down and destroying all of these lows, all of these support resistance levels. So if you want to learn more about these patterns and how to identify them and take advantage of them, make sure to drop a comment below this video, and also make sure to like and subscribe so you can catch the next one.